It's not about the property, it's about you. What kind of investor are you? If you're going to go to the stock market and buy Apple shares, well, you're going to buy $50,000 worth of Apple shares. You're deciding the limits of your investment capacity there. It's the same thing with property. A lot of buyer's agents, they're out there running around on realestate.com and they're trying to get the worst house on the best street strategy, going into gentrified neighborhoods. Here's what it does to you. Welcome to the Passive Property Investor Podcast, where I teach you how to stop trading your time for money with property investment. I'm Jerry Parker, your property investment consultant. Let's dive in. This one's going to be a little bit controversial. People are not going to like this, but I'm talking to passive property investors here. And you know, we have an overarching theme to what we're doing in our investment strategy. We're using our cash flows and our equity to put them into assets that go up in value, well-located assets. And we rely on location to deliver us capital growth and tax and rental income to take care of our interest payments. So to renovate or not renovate, should you buy a property that needs to be renovated? You know, a lot of buyer's agents, they're out there running around on realestate.com and they're trying to get the worst house on the best street strategy. And that's, you know, going into gentrified neighborhoods, you know, neighborhoods that are close into town. And once upon a time, they weren't such nice neighborhoods, but now all the young people are moving there and they're kind of cool and they're getting the coffee shops and the prices have gone up quite a bit. I mean, they're good places to invest. But the buyer's agents out there, they want you to take this strategy, buy the worst house in the best street. I think that's a good strategy if you're going to buy your own house and you fix it up yourself and you're going to live there. But as a passive property investor, we're trying to build our portfolios. Here's what it does to you. You buy this property and it needs repairs and maintenance. And so you have to pull cash out of your pocket to fix that. Whatever's broken. It could be a new fridge, or it could be a new kitchen, or it could be a new bathroom. And that's cash coming out of your pocket. So you're paying more for that property now than what you paid for it, because you're having to continually invest money into it. And that's not passive, that's active. And then you have to organize this remodeling of the kitchen or remodeling of the bathroom. That's not, you know, if you've got a full-time job and you already have a job, this is another full-time job you just put on yourself. And it can take a long time. And somebody's got to meet the tradespeople at the door, and somebody's got to make sure they show up. And who's getting paid for that? You know, how much are you worth per hour? Are you worth $100 an hour, $50 an hour? Well, you still got to pay yourself for that work. And it erodes the value of your asset and your time. I'm not saying you can't make money doing it. I'm just saying it's not passive property investment. It's active property investment. And another problem with this is you don't get the depreciation. You know, you're not allowed to write the whole house off on your taxes. But if you buy a brand new property, the entire building, you write it off on your taxes. And this is our strategy. It's our overarching purpose is to buy assets that go up in value. Sometimes you can buy a near new house and you're getting close, but you're still not getting the depreciation. But if you get on a larger block of land that could perhaps be subdivided, you could get more capital growth that way, but you'll get less rental yield. So those are some of the differences, the way passive property investors will look at this renovation. So how long is this renovation going to take? It's going to take longer than you think. Just whatever you think, you're going to have to double it, and then it'll probably be longer than that, because you're not a builder. You're not, you don't have a list of tradespeople that are devoted to you. You know, they'll have a whole bunch of jobs you have to fit into their schedule, and they'll come and do the renovation. And then what financial impact is it going to have on your interest that you're paying, or the lack of return that you're getting? Or maybe you've got a tenant in there and like you have to work in with the tenant as well. So there's a lot of issues to deal with this renovation process. And a lot of advisors advise against buying a new property, that you'll make more money out of doing a renovation, which could be true, but you're no longer a passive investor. You are an active investor. If you're going to be active, I would rather build a duplex, or I would rather subdivide some land and make more money that way, rather than all the intricacies involved into a renovation in a house. I've done one, and I'll never do that again. It takes too long. Okay, in a renovation is like, what are you going to do? What's the most cost-effective thing to do in a house? Well, it's going to be kitchens and bathrooms, and then the facade of the house, the way the house looks from the front, to get that street appeal. Those are the issues that give you the biggest bang for your buck when you're having to invest more money into the property. And there is a balance between maintaining the house and then over investing, because you're going to continually have to invest more. So there's going to be a bit of conflict you have with the tenant, because of course they want more done and then you want to invest less. Eventually you come to this state where you are a slumlord, and you will have to either completely renovate the whole house, or you'll need to sell it and therefore pay a capital gains tax on that. And you'll probably will make money, but it's not passive. It's still, you're running down that avenue of being an active investor. Okay, let's say we're building this portfolio. Are we going to buy new properties and use our tax savings and equity and higher rent with cash flows, or we're going to build a portfolio of old existing properties and have to go in and continually renovating, moving down the slumlord route, and continually investing in these houses again at a variable rate? We don't know how much every year each house is going to go. Did the air conditioning plant just blow up and it's going to cost you $20,000 to fix it? You just don't really know. Well, owning the property is where you make the money, is with the capital growth in your long-term portfolio. So if we're constantly having to put our cash into these renovations rather than putting our cash into new properties backed by bank loans, where we get 5 times the value of that cash in a loan, and we're buying a property, we can go faster with the new properties, where we get that depreciation back from our taxes, and we're able to deploy more capital into the property market. And with this passive, and we're still relying on location, but it'll probably be new locations and new properties to build this portfolio. So the speed at which we build it is going to be much faster with the new properties. If you're going to have a big lag factor on you having to do these renovations. So we're in our accumulation phase of our portfolio. We need to buy 4 properties. Well, we'll buy them much faster if we're able to use our tax coming back and new properties, higher rentals, and using the capital growth of those passively, and spending our time focused on our financing and property location of the new purchases rather than renovating an old house. So, you probably see a lot of videos and stuff online, people saying they don't buy the new properties, they're overpriced, they're in the market, but they're overpriced and you're paying too much, the land is smaller, you get less, and you should buy these old properties. And just, to keep yourself in perspective, it's know who you are. Do you have time to do this renovation? Are you a passive investor, or are you an active investor? And then this influence of people trying to get you is not going to affect you as much. Then, in the buyer's agent, it's easy for them to, how much money can you borrow? Go to realestate.com, get some agents to match that. Boom, there you are. And now you've just bought this big problem of a renovation. And I don't know, does it have white ants? Does it, who knows? You have to get all that inspected, rather than, you choose the location of where you're going and you find the new infrastructure, you tuck in close to that, you get a quality new home with higher rentals, write the whole thing off on your taxes, and use your equity growth because of the new infrastructure that's going in that area and the fact that you provided the service of building the new house. Use that equity growth to buy more properties faster. The key is knowing who you are. What kind of investor are you? And stick to your overarching purpose of your investment portfolio. Renovation, to do it or not do it. It's knowing who you are. You're an investor. What kind of investor are you? It's not about the property. It's about you. How you want to make this investment. If you're going to go to the stock market and buy Apple shares, well, you're going to buy $50,000 worth of Apple shares. You're deciding the limits of your investment capacity there. It's the same thing with property. You're a property investor. You're not just buying a house. So this is what the message I want to have come through on this podcast here on the subject of renovations. So if you need any help with this, help you coming up with your overarching purpose of your investments, which is really the first step of your building this portfolio, deciding what kind of investor you are. If you need help with that, I'm here for you. There's show links down below. You can click those, or you can contact me, set up a strategy call. I'll happy to help you figure out your investment property portfolio for the passive investor. Hey, thanks for tuning in to The Passive Property Investor. If you enjoyed this episode, the best way to show your support is give a 5-star review on Apple Podcasts and Spotify. Make sure you subscribe to the YouTube so you don't miss a single episode. We're on all social media platforms, so feel free to connect with me there. And if you're having specific problems making your first investment or building your portfolio, maybe you don't know which location to invest in, how much you should invest, you're worried about who to trust, reach out for me down below. I will have the answers for you. Don't hesitate. See you on the next episode.